Hi traders, Adam from Trade with Precision here, and welcome to IC Markets Market Commentary. So let's have a look at the euro dollar. It's attempting to test a very nice level of resistance close to that 1.17 level and looking particularly bullish at the moment, although to be fair, it is currently ranging. So no trend at this point in time, looking a little bit more bullish, but until it breaks out of this trend, it is difficult to predict which way it's likely to go. It is leaning a little bit more towards the upside. If we have a look at dollar yen here is looking increasingly bearish, testing a strong level of support, but producing lower highs here, looking very much as though it is potentially going to roll over and very likely to actually break through our level of support in the near future, which is around about that 146.84 level. So that could be hinting at dollar weakness. Then if we have a look at gold had a particularly good day on Friday. What's of particular interest is how this was very much also range bound, but now it is starting to look much more like a bullish ascending triangle pattern. So this is giving more likelihood here that we will see gold potentially break out. It's had a very nice consolidation going back almost to April, so it's had plenty of time to take a bit of a breather and looking more and more bullish now. All right, there's a little bit of divergence at the moment, so hinting at the possibility that it might be a failed breakout, but it is very much there and visible, but the price action itself is leaning bullish. Moving across and having a look at silver. So what's tragic for day traders is that silver can be incredibly choppy and messy during the day, but when you zoom out, you look at the bigger picture, it's actually looking incredibly bullish. There's also definitely some bearish divergence here, but a little bit of convergence there on the RSI showing this trend here is matched with that. So mixed signals there, but overall looking nice and bullish. If we move up to a weekly, you can see silver's just pulled back and continued to move higher. So it maintains its bullishness at the moment and is potentially worth your while because, you know, throughout its history here, if you compare silver to gold, it's just too choppy in comparison. But recently, it has actually been trending the same way. So it could be of some interest to traders there. Crude oil, not offering a lot of clarity. If we zoom out all the way up to the higher time frame, we can see a series of lower highs coming in. And it looks consistently bearish. It's produced a nice bearish candle here. The 50, 20, and 10 moving average geometry is all in a nice bearish formation. We've got lower highs coming in here. So the implication is that the longer term momentum is to the downside. The problem with this is that once you get down to the weekly and you go down to the daily, the trends become very inconsistent. It'll go up quickly, drop down quickly, then go sideways, then up, then down, then sideways and up. It's all over the place. It's not very useful or very high probability for traders. So worthwhile staying away from that. Now let's have a look at the S&P. S&P is great because it's such a large sample size of companies. It gives you a really good indication of the global health of the markets. But one of the things I do want to point out here is that the distances between the highs are getting smaller and smaller and smaller. You can see these last three highs are almost all of these occurring within the distance between the prior two highs. We could just see that the gaps between them are getting smaller and smaller and smaller and not that new. So what this is showing us is that slowly but surely, and also you can see how price and the 50-period moving average are creeping closer and closer together. This is hinting at the slowing down of the markets here, which we've had before, we've had in the past. It hints at the idea that there's a potential for some form of correction, just a correction at this point in time in the near future. We've also got this consistent multiple divergences, meaning the MACD is continuing to trend lower, as is the RSI, just continuing to trend lower and lower. So this is hinting at the possibility of a correction. Combining that with the usual seasonal or annual September month often being quite bearish, we might find that we have a bit of a correction around the corner. But for me, key thing is going to be monitoring. This is currently bullish, but monitoring these key levels. Should we drop down and break any of these previous lows, that would then change the analysis. It would go from bullish to certainly not bullish. Tech is the same here. You can see, looking at the NASDAQ 100, a potential possible here, lower high here. Could this be leading into a head and shoulders pattern? It's possible. I only say that because the head and shoulders pattern is a change of trend. And so again, I would keep an eye on these lows here, really wanting to see if we break below that. But look how that 50-period moving average is creeping right close to price now. And again, a break of this trend line, a break of these lows, a break of support level, and a drop below 50 would be a shift from bullish to not bullish. We have to wait to see a change of trend confirmed, but that's what it's showing us. Meanwhile, look at the Russell 2000, this bullishness, fresh highs continue to move higher. The Russell 2000 has been a lagger, but it is catching up, and it is very bullish at the moment, looking particularly happy with itself, just really climbing so much lately, very much after the sort of V-shaped recovery So quite bullish there. HK as well. HK, you can see it creeping up in towards these highs, also finishing Friday quite strong. This is looking quite nice and bullish. So I'm just showing you the US side, and then of course we're going all the way to the non-US side, opposite side of the world. You can see HK, which has been one of the historical laggers, is actually managing to look particularly bullish at the moment. So meaning that this bullishness is not just in the US. They were saying it's global. And if we are likely to get a bit of a correction in the US, it's more likely to be a correction than potentially a longer term change of trend at this time. Tesla. So Tesla has finally managed to break outside of this pennant, which is not a very strong signal necessarily, and we could see that actually the end result of it was still relatively bearish. It's really battling here with this sort of resistance around about that $350 mark, so battling with that, not looking particularly strong. You can see wicks above, wicks below, wicks above. There is still a battle going on here, even though it has broken outside of this. So we can actually just effectively delete this because the picture is now looking more and more as though there might be a build-up again towards a breakout towards the upside there. Let's keep an eye on that. Then having a look at NVIDIA, we can see here when we look at it from a weekly perspective, price is currently pulling back into the moving averages, definitely battling with a resistance level around that 182 level, battling with that and currently pulling back into the moving averages. I was actually looking to see if we would possibly get a pullback down towards that 150 mark before continuing higher. So that is something, again, that if we do get a general market correction, this could be one of the ones. This would provide a potential nice buying opportunity if it does come back down to test these previous highs and also back down towards the moving averages. Final one on our list, Bitcoin. Let's have a look at that. So Bitcoin actually finishing much lower for the week. If you have a look at that weekly candle, you can see we've pulled back into this level of resistance. We're going to see if we're going to test it for support. It's a very good place for it to do that. It is also within the moving averages. So if this coming week we do end up with a nice bullish candle off this level, that would be a tremendous potential buying opportunity there, looking nice and bullish. That would show signs of bullishness. So there we go, plenty to look out for. Don't forget, this coming Thursday and Friday we have US jobs data coming out, so expect some increased volatility. And so in fact we could find that Friday itself finishes completely differently to the rest of the week. Just be prepared for that. Otherwise, traders, plenty to look forward to, and definitely some trends in the markets at the moment, which is a good sign compared to April and May, where there was very little happening. Thank you very much. Have a good one.